Hey everyone, uh, thought I'd just record the first red day trade setup in short order after the first green day because, as I said, one is the exact opposite of the other. So you can watch and compare both and just study both together. So I'm gonna be talking about the opposite of the first green day, which is the first red day in this video. All right, so let's get into it. What is the first red day? Well, when we hear red, we tend to think of, or even red day, we tend to think of Valentine's Day. But in this case, it's not anything mushy. It's more about uh, having more precision in your trading. So let's get going. The definition, according to bullishbears.com, it's any day close where the open is higher than the close, and that is called a red day. Or simply put, it's a day where the market has closed below its open price after a pump day. That is the important part of it. As it relates to this trading style, you have to have had a pump day or several days of price rising, and then you suddenly have a day where price closed below the opening price after the pump, and that will be your first red day. All right, so how do we apply it? It's a sell high setup, meaning you can sell at the high of the day, the high of the week, the high of the session. It depends on how the setup plays out, then you apply it accordingly. Now, the steps to take to enter this trade. As mentioned before, the first green day, not much difference. You mark the consolidation into the close of the day for the first red day. And coming into the setup day, you mark that same consolidation that tapering off of price coming into the close of the day that is marked as the first red day, heading into the day that we're looking for the setup. We wait for price to do a stop hunt at the high of the consolidation range. That stop hunt can also be at the high of the day, the high of the week, the initial balance high, those areas where liquidity rests. We wait for a breaking structure. We wait for a retest of that breaking structure. And we look for entry criteria to enter the market. So whatever the entry criteria is, you use that. Whatever your entry rules are, you use that. And that would come after you've seen the stop hunt and the breaking structure. Some persons refer to the BIS as a CHOCH, change of character. It's the same thing. Your target would be at least 50 pips, possibly a 1-to-3 or 1-to-4 risk to reward ratio. It can be more because you tend to get really explosive trades coming out of a first red day or a first green day trade. You can, in terms of your targets for your take profit, you can look at liquidity pools that are at previous swing lows, the initial balance range low, previous day's low, the low of the current day, the weekly low, and the previous week's low. Logical targets. The targets can also be measured in terms of a measured move, meaning the range itself. You can anticipate sometimes that price will move 2 to 3 to 4 times that range expansion. So or that range size. So it will expand 2 to 3 to 4 times the same range amount. And you can use that as a way to kind of guide you as to where your take profit is as well. Now some examples of what a first red day setup would look like. As I had said, you have a pump day. You have a day after that where the price closes below its opening price on this day. This would now become the first red day. We mark the consolidation coming into the close of the day. So all this tapering off. We have this range in price here. We have a false break reversal above the range. That's our first signal. And then we have a breaking structure, which happens just at the low of the range. And remember that we're looking for a sell high setup, whether it's at the high of the range. The high of the day would have been this, so it would have been a high of day setup. And we look for a retest. And in my case, I look for a pin bar and engulfment. A pin bar is here. That pin bar was engulfed with this huge bearish candle. My entry would have been this spike here. Now, could have been the close of the candle, but because of the size of the candle, I probably would have waited for a retracement, and this retracement would have been the entry. So just to recap, the pump where price was pushed up, and we had the next day where price closed below its open. We look for the consolidation into the close of the day, heading into the open of the next day. This day is now our setup day. Previous day is our signal day. And we look for the false break reversal, which is a stop hunt. My dog is being loud at this time, but it's okay. And we look for the retest to that breaking structure. And this would have been our trade continuation of the trend coming from the first red day. Next, we have a pump, just to go over several examples. This is a good example to even go through. A first red day or even a first green day setup doesn't always come in like 3 consecutive days. It can come in 4 days, and this is an example. So what happened here, we had that pumping price, but then the next day price went into a range. So price basically opened and closed at the same place. And then we had the first red day. We had the open here, we had the close below. We look for the consolidation going into the close of the day, which was this high, this low. We had a false break reversal, a stop point here, and then we had a breaking structure and retest, and then price continued in the same direction. Next, we had this case where on the day of the setup, we had a huge news event. So we had the pump, we had the price open, price close below here, and in the closing of price, we had price tapering off into a range. Continuing, we had a false break reversal at the high of the range. But then we had a news event. This would have been a New York session where price simply does, if I would not advise anybody to trade before the news, and that is what the next video will be about, which is the first bounce trade, which would have given us an opportunity to enter the market after the news event has taken place, at least 15 minutes after. So we wait for that news candle to close, and then we look for the retracement or entry in the retracement for the continuation. We do not trade against the direction of the news. We trade with the direction of the news when it comes to our first bounce trade. But I will go into details on that setup when I do the first bounce setup video. So in this case, we may not have gone in, but it's the same principle, meaning we had the pump, we had the open, we had the close below the open, we had the false break reversal. Our ideal entry would have given us a pullback, and that would have been our entry after the breaking structure here. But obviously for the reason of the news, that did not happen. The pullback was short. This would have been considered a first bounce trade, and we would have taken that instead and taken whatever the market would have given on this day after the news. And that would be it. It's as simple as that. Very powerful though. Do not discount the simplicity of the setups. They are very, very, very powerful. I don't know how much more to express that in terms of the confidence that I have in these setups and how they play out most of the times. I would have shown you some variables as to how they could play out otherwise, where you would have like other factors that come into play that would have changed the setup, such as price being at the high of the week or the high of the month, and so on. So it depends on what is happening in the charts. We basically allow the charts to build a story. We read a story and we act accordingly and react based on what is given, not what we want to see. I hope this has been helpful. I will continue to update this playlist with the series of the best setups playbook, and I hope you find much value as you go along. All right, have a great day, great night, great trading week, depending on where you are in the world. Take care. Bye.